What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for July 22nd, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market that we are in. Are we in a reversal? Are we going back to all-time highs? Well. We shall see. We shall see. Now, there's a lot to unpack with what happened today. Something I've said the past 24 hours, we're going to be big and pivotal. Since the video last night, Tesla did beat earnings barely enough. We have to also understand that a lot of companies are either not giving guidance or coming in with extremely low expectations. So with that being said, anything that's barely above the minimum passing bar, people are coming in and blowing them out of water. We saw that with Netflix just the other day. Netflix lost 1 million subscribers, but because expectations were extremely low, they looked like a winner, only for it to sell off pretty heavily this morning and recover today. But with that being said, what was most important today was the ECB came out, and they were expected to only have a 25-point basis move. They came in with a 50-point basis move. Now, this is after 11 years without raising rates, and they came in with a 50-point basis move. It tells a lot. Not only that, but the one good aspect today, coming into the day, was the other thing, was to see if the oil pipelines would be turned back on. If Russia was going to turn oil pipelines back on, they did. That was a phenomenal thing, because if those pipelines weren't turned back on, that could really lead to some really significant damage to the market, especially with the EU, and then that would essentially have a cascading effect if that wasn't the case. But we're good. The lines were turned back on, so that's a positive. That was a big positive that essentially kind of allowed the market to get some sort of hopium in the fact that core CPI is still 9.1 and ECB is coming with a 50-point basis move. So there is still a very dark cloud. Don't forget that cloud exists. Now, for me, I try to go into each and every day off of where we land. Today was a very bullish day, right? Like you could see the bulls were ready to rock and roll today. We saw that primarily led by Tesla. Now, one thing to consider is Google. There was a couple of them. Amazon, they were hit hard this morning. They were selling really hard this morning. And then with Tesla, it was pushing so hard that it essentially kind of pulled everything back up. Apple was holding as well too. Chips are doing fairly well too. Banks were holding, and that's really what mattered, is the banks were holding. They didn't do a whole heck of a lot, and primarily I think because of Goldman Sachs has done extremely well. So there's a lot of different things playing into going into tomorrow. We also had Snap earnings today, and this is something to keep in mind. Snap essentially almost sunk the market last time because they got obliterated and they were losing mass amounts of revenue. Same thing happened today, and Snap got wrecked. So I think Snap was up over $80 at the beginning of the year, and then now it's down to $12. So, and they lost a huge chunk. I think it was 25% of their ad revenue. So this is something to look for too. These are the little pieces you need to be watching for. Is the ad revenue is come way down. Why is that? The demand is not there. All right, the data isn't going to reflect this stuff till later on. But what we're seeing is that people aren't advertising. They don't have the revenue to be advertising, especially if there's no one buying. If there's nobody buying, right, they're going to dial back on advertising. These companies are going to be spending as much on advertising, right? So there's another red flag. We're getting tons of red flags. We got a 50-point basis move with ECB. We've got 9.1 core. And then we got Snap that's having to dial back. We're getting layoffs, right? And so this is why expectations are so extremely low. I don't even think there was much of a forecast at all for Snap for the next cycle. Now, Snap's kind of been in a free fall ever since Apple started implementing their new policies. And so going into next week, again, pivotal week, and we got the Fed next week. I really feel like the Fed's going to potentially come at a 100-point basis move. Now, this is something to consider. The fact that we got really bad news and we're starting to push, the market may be numb to it and really doesn't care. Unless it's a 100-point basis move, the market may continue to run up. That's not saying that things will get bad, go to all-time highs. Really have to see how it is. And this is something you have to learn in any market, is you have to learn to adjust and not be too much to one side. I have really been thinking heavily that we're going to start selling off. I think right now you got the earnings momentum, and that's what's helping us. And I think the market is trying to prepare for next week, because it comes at 75 or 100-point basis move. You already got companies dialing back. Imagine how much more they're going to dial back if they get another 75 to 100-point basis move, right? They're going to be dialing back even more than what they already are. And you're not going to see that until Q3 results, because we are currently in Q3. And so, interesting day. We're moving. We're pure earnings mode. This is what's pushing us up. Is it? People can say it's essentially a dead cat bounce. Whatever the case is, we've been selling really heavily and really haven't pushed. I've been talking about our pre-earnings run. It looks like we could potentially getting that. You got a couple good earnings, so the market's like, okay, well, maybe we aren't as bad. Let's try to build some margin before we get into next week. And so you're kind of seeing some massive rippers right now. But the key is really, we could, like I've been talking about, we could push all the way up to the 4K 55 mark, 4,055 mark. Strong possibility, right? And then if we sell from that point, that could be an issue, because that would make a higher low compared to this, and we could start heading lower. Right, it could be perfect timing that, hey, then now we get the 100-point basis move and it sends us right back down here, and then make a lower low from this 36.36. And then another thing to consider too is that you had Biden is diagnosed with COVID as well. He's saying mild cases now, but he is very old, and so that could be a concern. If something happens, not saying it will happen, but if something happens to Biden, right, the market will lock down. You won't be able to touch anything in the market for potentially 2 to 3 days. Then if you have any kind of options that expire soon, those will essentially go all to zero. So you have to be mindful of these things and be very careful, because there's a lot of, I've been talking about, we've been walking on eggshells, and just one wrong piece of information could send this thing right back down and put us in panic mode, because we've been flirting with panic a lot lately. So with that being said, looking for that tomorrow. I think it could potentially be another bullish day tomorrow, running up to that, and then going into next week, we could start selling off. Really just depends on how the market is tomorrow. But right now, what's concerning, what we really need to be paying attention to, again, is the fact that Snap did poorly. And then your Google started selling off, your Facebook started, any ad revenue is going to start selling off, your TTD, all those. So you got to be mindful of that and see where they go, and if they start pulling down the market. But again, you have the banks you can look at from that point. So Bitcoin currently, again, look like a potential bull flag. Again, like it has a headroom, just like the market does, right? You haven't even retested any of these breaks, and to think that we're just going to reverse and start going back up, I'm not too sure about that. And we haven't retested essentially the 27 mark, right? You have a solid support here. You broke and you never came back up to that level. So my guess is we will have a rally. We need a rally, get some sort of a rally. And we're getting that. Like I just explained on the SPX, we do have some headroom. Bitcoin does have some headroom. But I think, coming another 75, 100-point basis move, then we might be like, okay, well, it's 75 point. Yay, it's not 100. We might run off of that. Right now, we're running off of hopium. And so When reality sets in, this thing right after earnings, even after big tech, right, next week, we could just roll over and just start selling again. So just be mindful of that. Take profits along the way. To hold or hodl in this market is not the thing to be doing. That black cloud is really bad. There's a lot of really bad stuff going on that everybody wants to ignore. Again, I'm very much a perma bull, but I don't like this setup, what's going forward. There's just too many like really bad red flags that can just lead everything into a spiral. Even though we've corrected only 25%, I don't think recession again. I keep reiterating this. I don't think recession is going to last forever. Yes, so we're currently seeing recession. We're seeing the beginnings of it. Again, you wouldn't have stock splits and layoffs at this point. You're just seeing the beginning of it. And again, we come in with another major point increase that is going to may even make further cutbacks. There are going to be more layoffs. And then that's going to start affecting Q3. And then you're going to start seeing more issues, right? People can't get work. And people diving into savings and don't have any savings left. And it can get really nasty really fast. And the fact that you got the ECB, who hasn't done anything in 11 years, is all of a sudden raising 50-point basis. It doesn't seem like a lot to us because we are accelerating our increase extremely fast. And it's potentially too fast that we're raising rates. And what the ramifications are from that. So again, Bitcoin, we still have room. So yes, we can rally more. I'm not saying we can't. We should be rallying on these drops, but the fact we haven't hardly rallied because the market's been scared. They don't know what's going on. So no one's really been buying. Now people think break, potential rally. We haven't even retested it. You're going to get hard rejections off these here, right? Like it's the 27 or the 28 K mark on Bitcoin. You're going to get a hard rejection. It hasn't retested after the break. It's just been dormant. No one's been buying. So yes, we might get a strong pump for the next couple of days, but you better be very wary about next week. And that's what's weird is a lot of stuff has been moving really weird. And speaking of the dollar has been holding this 106 mark extremely well. I'm not saying it can't break back down below it, but it's holding and consolidating for potentially another move up. This thing started really ripping back up again, and the market's going to tank, right? And we've seen how it affected. The dollar has actually helped Netflix get out of its hole because they get a lot of revenue from overseas, and a strong dollar. So when you're converting it back to dollar, or you have that conversion, you're gaining more, right? So with that being said, we have to really see how things play out. Oil still at 96, right? It's floating around that 100. So essentially around that 9,500 points a gallon, right? And so that's something to be watching. Tomorrow, definitely to watch is Tesla. Had a massive rip today. That's good to see. You don't want to see this thing stall and then start selling off because that would mean that things are really bad. But I think the oil news, again, really helped Tesla. Again, if Tesla doesn't break above the 830, normally the second day is even bigger day. So this is something to really watch. If it can break above that, if it gaps up over 228, this thing is going to rip, and it could rip all the way up to 875. Would not surprise me. Again, the second day is always bigger. Again, I think the market's trying to get some sort of cushion before what could potentially be happening next week and in the coming months. Again, no one wants to put forward guidance out there because you're uncertain, and core inflation is still at 9.1. I think everybody's forgetting core inflation is at 9.1 and seeing where that is. So we'll want to watch this tomorrow. Again, if this starts selling off, normally the second day is the strongest. Normally you get 3 or 4 strong days. And when you start trying to play to the upside on a fourth and fifth day, you're really pressing it. So typically on runs, I like second days best. That's why I want to watch Tesla tomorrow. This could really rip nicely tomorrow. But when you start talking about like third and fourth days, right, it starts to pull off. So then you're kind of playing with fire, and you start reducing risk on that third and fourth day. If the second day, if this isn't gapped up and starting to run, that's telling you that that's a sign that you should get out, and it's a Friday as well. So we have to see, especially with Biden getting sick. We don't know what could potentially happen there. So So Tesla is an interesting case. I do like it to the upside tomorrow. I do like the market to the upside tomorrow, to be honest. I think we can get one more strong run potentially tomorrow, as long as we don't gap back down, unless we don't get any bad news overnight. I think we should continue this earnings run, and then I think we'll pay for after earnings. I think once we get through next week, once we get some of the bigger earnings through, we could start potentially paying. And again, it really just depends on the Fed. If the Fed start really hiking rates, we're just going to start seeing that cascading effect. So Tesla is the one I'm watching, and this is what I was talking about. Google, you have to really be careful with this because of Snap. A lot of ad revenue comes into Google and to Facebook. So if this gaps down tomorrow, this could start pulling the market down. Again, this is why they did stock splits, so you don't have quite dramatic moves like you did when it was at I think it was 1,500. I don't remember what Google was at. I think I'm pretty sure it was on the 1,200 or something before it got the split. But nonetheless, we're looking to see what this does tomorrow. Again, if Snap really starts to sell, this could really start coming down fast. So again, you're looking for sympathy plays off of Snap. So your Googles and Facebooks, TGD would be the big ones, potential tomorrow. So watching them. Amazon, interesting. The market was running and it really didn't do too much. This is another possibility of concern with inflation. How much is it going to affect retail? So we're kind of watching these and seeing what happens with these as well. But more so, I think I would rather play either Tesla or one of the ad revenue companies, and watching those ad revenue companies downside, Tesla to the upside is kind of really what I'm watching there. Value today, it's continuing this ascending wedge here, and it's getting really, really tight. That's what makes me think we're really leading into next week where this thing is just going to fall pretty hard. Not saying it can, and not trying to be push any kind of bear sentiment here, but the sentiment of the market is just really bad. And try not to predict that, right? We haven't seen the worst of it. We're just starting to see it, but nonetheless, technical wise, ascending wedge. You have another potentially smaller ascending wedge here, so we can get a nice drop to here tomorrow. Then could potentially start running back up and then drop again from that point. But we have to see what happens. Looking on the daily here real quick, you got a really sharp ascending wedge here, so I wouldn't actually be surprised if this gaps down before the 157 and then pulls all the way back down to the 50 to 142. We had a break and no actual retest, so you don't want this thing to go parabolic. You want it to pull back some and be testing resistance levels and not just go parabolic all the way up, because it's going to lead to more of a crash and not just a pullback. You get that's when you start getting really healthy pullbacks at that point. So coin could potentially be a good one tomorrow with Bitcoin running. If, like I said, we get some headroom here too. As long as we can hold above the 76, could potentially start really running here back up to the 97. You got a pretty clean shot from that point. If the whole market just starts to rip, coin could be one of the front runners as long as Bitcoin continues. So watching that one as well. Snap, again, earnings, and bam, this is what ad revenue does. The fact it's got two bad earnings in a row, or just it's not producing like they thought it would. Yeah, they recovered a little bit after the Apple thing, but then after that, this thing started dying off. This is really bad, right? If this now, just because of the way the market is and the meme stock culture, people are going to buy this thing and it's going to go all the way back up, right? So you might get some sort of pump tomorrow on this. I definitely would not be playing this to the upside in the morning, but be more so looking for the downside on any kind of pump, and then grab puts to the downside, in my opinion. Again, not financial advice, but that's just the way I see it, because of the way it is. And then like TTD started selling off, like I showed you. Google was selling. Meta, if I could find Meta on here. I haven't traded Meta in a minute, so I don't even know what's on here. Meta, same thing, right? Sediment plays. So I talk about sediment plays, and this thing is selling off just along with it, right? All ad revenue, things you need to be looking for. This thing is starting to sell pretty heavily there as well. Chips, pretty strong today, but I don't like the fact that we're kind of like consolidating and struggling. Normally that means you're going to roll over. If you hit that hard ceiling and you just can't break it, this 543. If it continues to hold here in next week, I can almost guarantee you this thing's going to fall down and get a healthy pullback at that point. And that's ultimately what it's going to be. Are we going to get a healthy pullback? Or are we going to test and break that critical support is really where we're at. So banks, JPM, I don't even really want to look at JPM. They did horribly bad, and they're just continuing to chop. Goldman Sachs has really been a beast, but you have to also understand Goldman Sachs has ran for 1, 2, 3, 4, 5 days in a row. Right now, you're playing with fire. You could potentially get a small push in the morning and then a potential drop. I know earlier this year we had we had some sort of record. I don't remember how many days straight we ran green. It could be potentially what we're getting now because we haven't hardly had any green this year. And that was during the earnings run, right before our pre-earnings run. It's typically when you'll get your momentum like this, and then it just sells off, right? Like all the premium is killed on the puts. And then once that premium to the call side is kind of built up again, then you get some sort of news sentiment that just sells everything back off again. And that's kind of what I'm thinking is going to happen here. Not saying it will, again, not financial advice, but that's typically what's been happening this year. Again, the cycles change a little bit during whatever's going on in the world. Right now, historic time, hopium and also earnings mode is pushing us through some really bad news about a 50-point basis move. That a recession is in store coming, and is beginning stages. Right, it takes time for this to play out, and so we'll see what happens. Especially next week, we'll get some bigger earnings. Again, Tesla, I think, skated by the skin of their teeth. Still very struggling this quarter, and they normally don't struggle, and that's telling you a lot. And the fact that there's already been multiple comments from Elon and everything else and cuts and everything, you're just now starting to see the cuts. That means it's just now starting to begin. Right? The fun hasn't even begun, put it that way. So anything, again, taking profit along the way is extremely important, I think, in this market. To just hodl and think that we're going to go back to all-time highs soon. It could happen, it could not. There's always a 50-50 chance. But from what I'm seeing and the events that are coming up and the things that are happening, I don't see us going back to all-time highs unless things really line up. And core comes down. If core came down, then I'd be like, yeah, we're easily going back to all-time highs. But the fact that the core keeps climbing and you get major corporations doing cutbacks and everything else, it's just and the Fed not dialing back, right? If the Fed don't dial back below a 75, they're not dialing back yet. If they're coming in at 75 or 100, I think they are still full court press until they get control of it. Then you get the whole Biden thing with COVID. So if something happens with him, then that adds a whole new dimension to the markets and a lot more fear and panic. So that's why you need to be taking profit along the way. And just wait for the next cycle, right? Because cycles always play the same. After the earnings are done, the market will sell off and then get positioned again and do it all over again. It happens every cycle. Sometimes that's moved up a little bit more. Sometimes it's pushed back right till earnings, like we're kind of seeing right now, just because of the different events that are going on. It really just depends, but it's always the same cycles. It's just the timing of the cycle when it happens. And again, you want to have multiple day runners. You want to be testing old resistance, so that way you can be more of a bullish, believable move as opposed to just going parabolic. When this thing just goes parabolic, it just means you're trying to build margin because this thing's about ready to flush. So if you made it this far, I appreciate you. Go ahead and drop the like button on the video. Until next time, I'll see you guys. Bye.